and thank you for attending this webinar. My name is Javier Tatay, and I am Knowledge Manager at the AIESEC Global Finance Board. The approximate duration of this webinar is around 30 minutes. Here we have the index and the learning objectives. This presentation is divided into 3 parts: understanding, checklist, and implementation or real examples. As you can see, the learning objectives will be the importance of accounting, financial statements, accounting principles, and the implementation of these accounting principles and real cases. As this is the first webinar regarding finance knowledge, I would like to present which is the role of financiers, not only in AIESEC, but also in every organization or business. As you can see, there are 3 basic types of issues. The first one is an area generally referred to as a capital budgeting that answers the questions, what long-term investments should my entity or LC undertake? The second one answers the question, how should the entity or LC raise money to fund these investments? These kind of choices are generally referred to as capital structure decisions. The third one answers to the question, how can the entity or LC best manage its cash flows as they arise in its day-to-day operations? This area of finance is generally referred to as working capital management. Remember that while finance is primarily about the management of money, a key component of finance is the management and interpretation of the information. So finally, here we are. As you know, during this webinar, we are going to talk about the very basic accounting, so don't expect too much complexity in our operations, just the very basis of the accounting. First of all, I would like to present accounting, but what is exactly accounting? Is it important, or is it just a task that can be done at the last moment? Well, of course it's important. And of course, it's also composed by mainly of constant and work every day. The Oxford Dictionary defines accounting as such as the process of work of keeping financial accounts, which can sound really simple, but as long as we are going to enter gradually into this topic, we will see that it can be a bit complex. We are going to enter right now to the second part, which is the checklist. First of all, I will talk about the balance sheet. The accounting balance sheet is one of the major financial statements used by accountants and business owners. The balance sheet presents a company's, or in our cases, an LC or entity, financial position at the end of a specific date. Some people describe the balance sheet as a snapshot of the company's, or as I said before, in our cases, LC or entities, financial position at a point in time. As you can see, on the left side of the balance sheet, we have the assets that can be divided into long-term assets, current assets, receivables, and accruals and other assets. And on the right side, we have the liabilities and equity, where we have the equity, the liabilities divided into the short-term and long-term, accruals, and other liabilities. Remember to do always this balance sheet at least once per year. As long as your finance knowledge starts and so on, you will do more balance sheets among the year. For example, doing one every quarter. The next point that I'm going to explain is the double entry or bookkeeping system. The double entry system of accounting or bookkeeping means that every business transaction will involve always 2 accounts or even more. For example, when a company borrows money from its bank, the company's cash account will increase and its liability account, loans payable, will increase. If a company pays $200 for an advertisement, its cash account will decrease and its account advertising expense will increase. As long as we go further in this webinar, you will understand this concept better, as we are going to track with real examples. The next financial statements is the income statement. An income statement is a financial statement that reports a company's, or in our case, in LC or entity, financial performance over a specific accounting period. Financial performance is assessed by giving a summary of how the business incurs its revenues and expenses through both operation and non-operation activities. It also shows the net profit or loss incurred over a specific accounting period. Remember, as the balance sheet, you will need to do at least once per year the income statement. Here we can see a real AIESEC income statement where we have on the left side our costs, that can be the direct exchange costs, the direct that are related with our activities. We also have partnership delivery cost, or youth speak, or conference and meeting for members, overhead, entity affiliation cost, and so on. On our right side, we have the revenues, starting with the exchange revenues, business development, youth speak, conference and meeting for members, entity affiliation revenues, and sponsorships, and other revenues. The next financial statement is the budget. The budget is an estimate of cost, revenues, and resources over a specific period, reflecting a reading of future financial conditions and goals. One of the most important administrative tools, a budget serves also as a plan of action for achieving quantified objectives, a standard for measuring performance, and device for coping with foreseeable adverse situations. If you don't have too much idea about how to build your budget, don't worry, because at the Global Finance Board we have at our YouTube channel the How to Make Your Budget guide. So if you have some doubts regarding the budget, please check out the videos on our YouTube channel. Right now I would like to discuss the uses of the accounting programs versus the Excel. With the accounting program, we must do our daily accounting, overview about current liquidity, liabilities towards members, registration of income and expenses, and generate the official documents, and so on. Some examples are, for example, Wave, that you will learn more about in the next webinars. From the other side, we have Excel. We can use Excel to see a general overview about the financial situation, comparison planning and actual values, tracking of budget spendings, consolidation of MCLC, etc. So in summary, we have from one side the official documents, which can be made for our accounting programs such as Wave, and from the other part, the non-official but also really useful Excel that you can use for tracking your activities. Moving on, I'm going to talk about financial and distribution model. The financial model is how the amount of money that the entity is going to spend, that is specified at the budget, is going to be distributed among the MCs and the LCs. The distribution model is how the amount of money that the LCs must pay is divided between them. This is probably the most difficult part to create, and you need to take care of how you balance their payments, understanding the different realities between them. In our YouTube channel, we have also a guide of how to make your financial and distribution model. So in case that you have some doubts, please don't have doubts of checking this YouTube account. We are almost finishing our checklist. So right now we are entering into documents. The requirements of accounting documents are those documents which prove accounting transactions, as such invoices, vouchers, payrolls, etc. They must need to have the identification number of the vendor, the amount to be paid, the date on which payment should be made, the accounts to be charged to record the liability. Remember always to keep all these kind of documents for at least for a period of 5 years. Moving on, we have the accounting principles. There are several accounting principles, so I'm not going to explain all of them one by one. You can check it on the finance minimums in our finance wiki. So I'm just going to pass briefly on them. We have some, for example, the accrual principle, consistency, cost principle, full disclosure principle, going concern principle, monetary unit principle, reliability principle, revenue and cost recognition principle, and the time period principle. Once we have passed through all these principles that can be sound a bit confusing as we don't have real examples, now let's going to turn these examples, this theory, into reality. So we are entering the third part of the webinar, which is the implementation and cases. As I told you before, as we are going to take the very basis of accounting, we are going to start from the beginning. Under the double entry system, double entry system, every business transaction is recorded in at least two accounts. One account will receive a debit entry, meaning the amount will be entered on the left side of that account, and another account will receive a credit entry, meaning the amount will be entered on the right side of that account. The initial challenge with double entry is to know which account should be debited and which account should be credited. This is some little trick that you can use to remember where usually, not always, accounts go on debit or credit. So accounts that usually increase with debit, we have DIL, which is dividends, expenses, assets and losses. And from those accounts that usually increases with credit, we have GIRLs, gains, income, revenues, liability, and stockholders' equity. And moving on, I'm going to talk about how to issue an invoice. And when we issue an invoice on one date, we usually don't receive the payment the same day that when we issue the invoice. So we use the accounts receivable instead of bank and the debit. As you can see on the picture above, on the debit side we have accounts receivable, and on the credit side we have the income account that can be, for example, let's say the outgoing global talent fee, and the VAT if it is necessary. Once we receive the payment, we can charge the money at the bank account on debit and accounts receivable on credit, as you can see at the picture. On the other side, when we are going to pay an invoice, sometimes we don't pay it the same day that we receive. In this case, we will use the accounts payable in credit, and in the part of the debit we will put the expenses and the VAT if it is necessary. Once we have paid, on the debit side we will put the accounts payable, and on the credit side we will put the on the credit side. For the rest of examples in this webinar, we are going to consider that the money enters or exits the same day as we issue the invoice. So, moving with the real operations, we are going to talk first about outgoing operations. Outgoing accounting is really simple. You just need to put the bank's account in debit, and in credit you will put the account for the program. That can be Outgoing Global Volunteer, Outgoing Global Talent, or Outgoing Global Entrepreneur. The number of the account will depend on each accounting plan of each country. Check the legality part to know if it is necessary to pay the VAT for outgoing activities. And remember that we only do one payment. So forget about two payments, those 30 euros before, also forget about it. So remember, only one payment. Regarding incoming accounting, we will put on the debit side same, the bank account. On the credit side, we will put the incoming account, that can be Incoming Global Volunteer, Incoming Global Talent, or Incoming Global Entrepreneur, and also the VAT. With the accounting program Wave, as soon as you create the invoice, the program calculates the VAT, books the income, sends the invoice, and also automatic payments reminders. You always need to book the invoice always as accrual, no matter if you expect the payment in the same financial period or in the next. Remember that you will learn much more about Wave in the next webinars. The next part that I'm going to explain are the reimbursements. Imagine that a member has spent some money from their own pocket and needs to be reimbursed. So there are two possible ways to handle it. one step and the two step. The one step way is that you reimburse and book the expense, as you can see above. On the debit side we have the expense, on the credit side we have the bank. Or the two expense, the two step, that you book the expense against an employee, or in our cases, or LC or MC member, and you set this medium account when you pay out the money. The advantage of this is that you can book several receipts on the account and reimburse everything at once, as you can see under. On the debit side the expenses, and on the credit side the LC or MC member, and when the money is sent to him or her, you will put on the debit side the LC/MC member, on the credit side the bank. Remember always to keep the invoice. So as it's really important to have the invoice, because it's the paper that is supporting our movement of money. Bank interest. Sometimes you will need to pay services expenses to the bank. You'll need to put these expenses on the debit side and the bank account on the credit side. Consider if you are paying too much bank expenses to change your bank, or choose one for the whole entity. Remember that this kind of expenses usually occur when you transfer money to other banks. Using the same bank, do not confuse same bank, different bank accounts, can provide a better alignment between MCs and LCs. So take your time to consider if your bank is the best for your entity or your LC. Cash. Cash movements need to be documented in your bookkeeping, but first you need to open a cash box. This is a transfer booking. How to do it? Really simple. On the debit side, we'll put the cash box, and on the credit side, we'll put the bank. Remember to keep all invoices that you pay with this money, so you can keep a track of all transactions during the cash box is open with official documents. The Global Finance Board has a great guide, so you can check it on the link that there is on the slide. But also, honestly, we recommend you to stop using Cashbook, as it needs a lot of control and tracking to avoid misunderstandings. Another part that is occurs in our day-by-day operations, or at least once per quarter, is the LCP, the LC fee. How to do it? Simple. Above, you can see how the MC should bookkeeping the LC fee to each LC. So we have on the debit side the bank account, and on the credit the different LCs. Under, you can see how the LC can bookkeeping the LC fee. On the debit side the LC fee, on the credit side the bank. Remember that the LC fee is calculated with the distribution model. What happens when our LC is not able to pay the LC fee, or it just can pay some part of the LC fee? Don't be alarmed. Economy is full of cycles, including the good ones and the bad ones. But always remember to take actions as soon as possible, because a huge amount of debt of only one LC can harm the whole entity. So how we should bookkeeping these accounts? On the debit side, we'll put the banks if they pay some part, and the account debt LC. It can be LC1, LC2, etc. On the credit side, we will put the LC1. On the if the LC pays the debt, so as we can see on the MC part, the debit on the debit side we will put the bank, and on the credit the debt LC1. From the LC part, we will put on credit the bank account, and on debit the debt of the LC. Remember that all LCs with debt must create a repaying plan. So this has been the whole webinar. So I would like to send you a final message. So don't be scared of accounting. Even if most of the times you don't know which account goes on credit and which one in debit, so you need to check it 3 or 4 or even 5 times, or you don't do your daily work of accounting the first month, or you don't know which one is the damage fee account, don't worry about it. Just remember that practice makes the master. Not only in accounting, but also in your life. You must keep constantly working to success in all your projects. Being constant is one of the key points in life. Remember that you can contact with the Global Finance Board. You can subscribe to our YouTube channel by entering through this link. You can like us on Facebook. You can send emails to gfb@i.iesec.org, and most important, you can check our wiki where we are going to put all our PowerPoints in www.ies.easy, functional, finance and legal. Thank you very much for your attention. I hope that it has been a worth webinar for you. And in case you have any questions so far, please contact the Global Finance Board and we will do our best to solve all your doubts. Thank you again and have a nice day.